Hello everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Thursday the 1st of August. The markets are still responding to this Fed meeting last night, and there was a disappointment for the Doves, and subsequently the dollar has strengthened quite sharply. The Federal Reserve cut interest rates by 25 basis points, pretty much the bare minimum that they could have done, given the market pricing. But the disappointment came in the fact that the market didn't get more of a hint towards potential further easing. We saw dissenting voices on the or from the hawks on the committee, and it certainly didn't look as though that Powell, in his press conference, when he said that this was not the start of a series of rate cuts, that certainly put the dollar on the front foot, and we saw a sharp move to the upside yesterday on the dollar. We saw a flattening of the yield curve, whereby basically the front end rose quite sharply. You can see that on the 2-year, and the 10-year actually fell. So markets worried about inflation expectations, worried about growth expectations, but the Federal Reserve not cutting as much as the market had been anticipating, seemingly. Subsequently, we've seen a flattening of the yield curve. Dollar strengthening has impacted across the Forex majors today, and yesterday and into today, sorry. We've seen the euro dollar breaching that key support at 111 big figure on the way down now towards 110 big figure and possibly beyond. We've got cable, which is broken down to new lows. We've got dollar yen breaking out to new 2-month highs. Look at that move on the gold price. We've seen gold below 1411, which had been a basis of a near-term range. That support is broken. Now that opens the key support at 1400 bucks. I'll go through all these charts in a bit, but some really key moves that we're seeing on these major markets as a result of the Federal Reserve last night. Equity markets. Equities fell sharply. The S&P 500 fell into the close, and certainly now is back towards a key moment for that S&P 500. Does it continue to fall? Well, S&P 500 futures a little bit more stable today. They were earlier around about 0.2% negative, but they've rebounded a little bit, and that's helped the European markets to stabilise to an extent, but they are still slipping back seemingly, and that continues into today's session. So it'll be interesting to see how these equity markets continue to respond, whether that selling pressure comes through and continues to fall away as the dollar continues to strengthen. Now, in terms of today's markets, today's factors to watch out for. Almost got it there. We're looking at the PMIs. The manufacturing PMIs on the first of the month are always a key moment for markets, key indicator. And we've had the Eurozone data. The Eurozone data just ticked a slight amount higher. Nothing too decisive, but a very slight upward revision on the flash data. We're about to see the UK manufacturing PMI. Manufacturing in the UK has been really hit by Brexit uncertainty, and the contraction of the manufacturing sector. 47.7 is continuing to deteriorate on that PMI. We're looking out for the US ISM data this afternoon. That the fact that the US Federal Reserve seemingly is again data dependent. We'll be looking out for all the key data points for that, and manufacturing PMI is going to be an important one, I think. So it's expected to actually tick a slight amount higher to 52.0 from the ISM there. So big focus on those PMIs today. We've also got the Bank of England today for anyone trading sterling. That's going to be important. How does the Bank of England set its play out, given the fact that in an ideal world, Bank of England wants to really be hiking interest rates, but the economy doesn't really suggest that that's possible, given the fact that you've got the Brexit uncertainty. So how does the Bank of England set its stall out there, given the fact that growth expectations seem to be deteriorating? So that takes me to my chart of the day, which is Euro Yen. Now, we saw the Euro Yen breaking down last week, big intraday rebound into on the ECB, but that failure around the old 2075 to 2130 level I think is a key reaction that the market has sold into, really. And what you've got these momentum indicators which have fallen over again. Look at those MACD lines and the stochastics, especially RSI back under 40. We saw yesterday's closing level with a decisive candle. Negative below 120.75, which means that that now becomes a basis of resistance, and that has happened this morning. So little intraday rallies back towards that resistance band of overhead supply, 2075 to 2130, are a chance to sell. I think for continued pressure back towards 120 big figure, and likely to be beyond that. As you can see here, 118.70 was a spike low, but that is not necessarily to be the end of it, considering the levels back in 2017, back in below 115 big figure. So there is downside potential in this move. You've got the RSI, as I said, just under 40, tends to go to 30 and below. MACD lines turning lower, stochastics just turning lower. So I think that intraday rallies are a chance to sell on Euro Yen. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to my YouTube videos, and you can go to our website where you can sign up to our trading webinars. And I will speak to you later. Thank you.